Stocks off session lows right now. This after as President Trump and the coronavirus task force in the midst of giving an update on COVID-19 cases still going down nationwide. And you know what? For the market itself, this is a typical consolidation ahead of a three-day weekend. But investment themes are beginning to emerge that I want and can't wait to discuss with the experts, including CEO of SureVest Wealth Management, which is a CI financial company, Rob Luna, and Kingsview Wealth Management CIO and Fox Business contributor Scott Martin. Scott, let me start with you. Home builders, I think they're acting great. Now, according to Redfin, demand is going through the roof for people who want to move out of these expensive cities. So are you buying that thesis? And if so, what stocks do you like?
Well, as somebody that's maybe considering that too, Charles, yes. However, I don't want to kind of spike the party punch here on the home builders. I think with respect to the home builders, they've run a lot, as your point was made there, Charles, and the fact that I think some of the valuations on the home builders are a little bit high right now because of that anticipation of the moving around within the country. So for me and for my money, I'd look more at the banks. I'd look more at the mortgage holders maybe from that side of that standpoint of this home moving that's going to be going on potentially. So if you look at like JP Morgan, Citigroup, those are companies that have really lagged the S&P, especially on this recent run up. Plus, by the way, all their debt seems to be backed and everything they have on their balance sheets is backed by the good old Federal Reserve these days. So I would look at the banks as a way to maybe play that housing boom that's coming.
Rob, same question to you. Before you answer, though, big shout out to Restoration Hardware, a grand slam, and it seems like it's benefiting from this same sort of thesis.
Yeah, no, that's exactly it, Charles. Thanks for that. Yeah, I mean, I think Scott's talking about it, right? And really, the demographic that we've been trying to play since the beginning on this is that demographic that Scott finds himself in, is that upper echelon, right? Because those are the people that are still working, like Scott, thinking about buying new homes. So when you look at some of the home builders, I might push back a little bit. Toll Brothers, which is really specializing in that demographic, like RH, is doing pretty well. And they're trading at a 40% discount to where they were just a few months ago. So I think that's one way that you could actually play it. Larger homes, larger demographic.
Put me down from Pulte, you'll go with Toll. We'll hit this another month from now and see who was right. Now, by the way, along the same line of thinking, no American is spending a summer in Europe, right? Let's face it. But people obviously want to get away. So the staycation rally, I like this idea, but is this something you could make money on? Scott?
It is, and I think one of the things that's happened, though, too, similarly to like the housing stocks, is they've run a lot in the last little bit here, Charles. So for me, this is, again, looking at things that are still behind the markets, things that still feel, in a word, a little stinky or a little smelly, if I could say that about these following companies, which is, the airlines. Frankly, like things like Expedia, which is obviously the travel booking site, and things like Southwest Airlines, LUV, Charles, that I still believe on a valuation basis are attractive, and the fact that they're just frankly hated. So in my opinion, if you're looking for this catch-up trade to keep happening, we talked about that last Friday, it's there.
All right, Rob?
Yeah, I don't know. I think, Charles, you still want to play some of the people that have got you there, but that would be said. You look at a company that just reported last night, Palo Alto Networks. It's not necessarily staycation, but it's stay home, people working from home. Palo Alto Networks actually is one of the few companies that gave strong Q4 guidance. Still a long way off its 52-week high. I think Palo Alto Networks is something investors should look at right now.
All right, real quick, I think I have time for the marijuana stocks becoming really intriguing. They had a great week this week. Some of them scuttlebutt about the effectiveness against COVID, but forgetting about that hype for a moment, Bank of America did put a buy on CGC this morning, Rob. Is this an area that you like? I know millennials love these stocks. Millennials are opening up accounts in record numbers, and if these stocks start to move, they're going to pile in.
Yeah, no, I agree. I mean, it's definitely a trade that I think you could play right here. I'm out here in California where actually it's deemed an essential business, and we're seeing lines as of coming here into West Hollywood today around the corner to get into some of these places. So I think there's some opportunity. That being said, we're not diving in there yet. We're playing it with a company like Philip Morris. We're getting a 7% yield, and we think when the dust settles, this is a company that'll enter that space.
All right, Scott, I'm not going to ask you. I won't put you on the spot. We ran out of time. I love you guys. Have a great weekend. And, we monitor everything you say. We'll be right back. I'm sorry. Let's go now to talk about the activists in Hong Kong. They're calling on citizens, all citizens, to protest China as they continue to move forward with this controversial national security law. Susan Lee joins me now with the latest. Susan.
This might be the knockout punch for the pro-democracy movement in Hong Kong. We saw those frustrations really playing out to the Hong Kong legislature yesterday, with scuffles breaking out between the pro-establishment, the pro-Beijing camp versus those that are for democracy. So it looks to be that China will be passing this Hong Kong security law, which enables Beijing to enact laws that they pass without Hong Kong's input. And also in the future, you'll see Chinese military personnel on the streets of Hong Kong, something that you haven't seen in over a century. Now, what is the U.S. response? Well, we heard from the Secretary of State this morning, Mike Pompeo, issuing this statement on Hong Kong, saying that the decision to bypass Hong Kong's well-established legislative processes and ignores the will of the people of the city would be a death knell for the high degree of autonomy that Beijing promised for Hong Kong under the Sino-British Joint Declaration. And that is the case. So when the British colony, of course, was handed back to Chinese rule back in 1997, they were promised autonomy for 50 years. And this, of course, some of the infringements on these freedoms sparked the year-long protests that we saw last year. Now, Carrie Lam, the embattled Hong Kong chief executive, highly unpopular in the city, says that the decision only targets acts of succession, subverting state power, and organizing and carrying out terrorist activities, as well as activities interfering with the Hong Kong internal affairs by foreign or external forces. Now, if you read into that, there is some finger pointing at possibly the U.S. government involvement. However, there is scant evidence that that is true. But if you take a look at the Hong Kong stock reaction, seeing the worst single-day sell-off in half a decade, down over 5%, I think global investors understand that this overreach by China, this continuing overreach by China, means the end of Hong Kong as the financial capital in Asia. Charles?
Susan Lee, thank you very much. You know, folks, I'm going to bring them back, Rob and Scott, because I do want to ask both of you guys about this geopolitical things, whether it's China, whether it's Russia, or anywhere else. Real quick, Rob, how might it impact or change your ideas about what this market's going to do?
No, I mean, we really looked at the tensions that were going on with China about a month ago, Charles, and quite honestly, we cut our emerging market exposure, with the exception of Alibaba and Tencent, down to zero from about 15% of our portfolios. So we positioned ourselves ahead of that. I think, you know, companies like Alibaba, they're going to be around. They're very dominant. There is a discount that's priced into those. I think you got to be really selective, though. And I think there's better places to be than investing your money in markets. So for you index investors that have that big emerging market exposure, I'd reconsider it.
Yeah, Alibaba had a great earnings report. The stock was up in the pre-market. Now it's down a lot, though, Rob. So,
yeah.
You know, yesterday, Baidu said they may just delist themselves. So,
yeah.
I mean, near term, there's going to be pressure on these individual Chinese stocks, without a doubt. And Scott, you know, the anxiety started this market off a little bit lower pre-market. And if we see these full-scale riots over the weekend, knowing that this, to Susan's point, may be the last stand for these protesters, it should impact us. To what degree?
There'll be some volatility back in the markets. I mean, frankly, Charles, the market is looking for reasons to probably get volatile again, so the protests could definitely be one of them. And I think, to Rob's point, if you're indexing overseas, frankly, anywhere outside the U.S. or even in the U.S., as we've talked about on previous segments here, don't do it. You've got to pick out good names, good, strong revenue names, good, strong profitability names here, and not just go with the broad indexes. So to me, I think Alibaba, if it falls another, say, 5–10%, is a great opportunity to pick up some.
All right, and I cut you off. I ran out of time before I had to go to Susan. I'll circle back now, Scott. Is there anything you like in this marijuana space, which we know those stocks at one point were super duper hot, then they fell off last year. Are they ready to go back up?
Well, they're ready to go back up. I don't know if they go back up to levels, Charles, that we saw, to your point, when all the millennials piled into them. Unfortunately, those were a lot of trades that trapped people. But one company I do like, because they're just not all cannabis, is Cara Therapeutics, C-A-R-A. And yes, I did have a girlfriend named Cara in high school, but that's not why I like the stock. They've got a lot of other things they're doing with respect to pain management and things as related to cannabinoids. I think that's a company that you can still get some marijuana exposure to, but they also have diversified parts of their business.
Rob, we're on the cusp of major breakouts right now in the midst of it. If the Dow gets above 25,000, could we start talking about regaining, going back to the all-time highs this year?
Yeah, I think so. I think there's a good chance it happens, Charles, for two reasons. Number one, there's still a lot of cash on the sidelines. Even you look at a day like today, the pullbacks are being met with lower volume. The rallies are being met with higher volume. And one thing, there's a large part of this market that's still not participated. The fact that you look at the NASDAQ down only 5% from its highs is really masking some of these stocks that are still down 30 and 40%. So you can get some catch-up trade that could push the indexes higher in our view.
A lot of opportunities. I prematurely said goodbye, but this is for real this time. Have a great 3-day weekend, guys. See you soon.
Thanks. You too, Charles.
All right. Yeah. Hey, folks, moments ago, President Trump.